what is bank alternate lending? Real simple.
Bank alternate lending is a type of financing that falls between a bank loan and a hard money or bridge loan.
Okay. You mentioned to me before that, we do losses on tax returns. Also, you've said to me, and a lot of people ask me, what can the terms be? But, all loans are based on credit, income, and collateral.
Yes.
Okay.
The bank alternate program, we have rates right now. Our floor rate is about 7.5. And we're trying to keep all loans in the single-digit rates. We have terms of 3, 5, and 10-year fixed on 30-year amortizations.
Okay. That's going to be my next question to you. What does 3, 5, and 10 years fixed mean?
Okay, what it means is when we do the loan, the interest rate is going to be fixed for a fixed period, 3, 5, or 10-year fixed, and it's over a 30-year amortization, which keeps the payments nice and low. Typical commercial loans, the amortization schedule is usually only out 15, 20. We actually go out to 30, almost like a residential mortgage, which keeps the payments very low.
Okay, so basically after 3, 5, or 10, if whatever the borrower gets, their interest rate could possibly go up?
Could go up, could go down, depending on the index that it's tied to.
Okay. One thing I would mention, on this I get asked a lot, we don't do any rehab, no construction with this main core product. But we do purchases, refi, and refi cash out. And I've asked you this before, but can you just explain unlimited cash out, which is what we do?
Okay, unlimited cash out. A lot of banks in this market, or a lot of lenders in this market, have caps on the cash out. So if somebody has equity in their property, they owe $1 million. The property's worth $1 million, but they only owe $100,000. Well, there's $900,000 in value there. We'll lend them up to 75% of what the property's worth, 75% LTV.
Okay.
So we'll give them a check for $750,000 cash out. So most banks in this market are really capped at about $100,000 cash out. So it's a huge feature of what we do.
Okay. All right. What is the cost to the borrower in this kind of loan? I need to ask you upfront costs. So let's do that first. Okay.
Typical fees on bank alternate, we don't do any type of commitment fees, nothing up front. When we issue a term sheet or an approval, the borrower's cost is paying for an appraisal, and that's universal and commercial. That's the one cost that no lender will pay for. So really it's the cost of the appraisal is what they pay up front. And then you'll typically see on these loans about 1% lender fee, origination fee, that we'll charge as the lender.
Are those the standard costs in the loan?
Yes.
You just mentioned?
Yeah, and there's some processing and some minor fees like that don't really add up to much, but that comes out of the loan proceeds.
Okay. I get asked a lot, what properties will we lend on, which it's right on the product sheet, but again, the properties we don't do, churches, no land, we already said no construction, no restaurants, no heavy industrial, no hospitality, and you told me that's bed and breakfast and hotels, and no foreclosures, bankruptcies, or default situations.
Exactly.
So,
we'll consider most property types though.
Okay.